Welcome to Breaking News to Trading Moves. Today we're looking at a recent event involving EV safety standards. It's caused a bit of volatility across the auto sector.
That's right. We're talking about a fatal crash involving a Xiaomi EV, the SU7 model, over in China. And, well, this incident has put a real spotlight on electronic safety systems in EVs. The knock-on effects, they're being felt in U.S.-traded markets, impacting suppliers too, even though the crash itself wasn't here.
Okay, so our goal here is pretty straightforward. Figure out what happened, what it means right now, and maybe identify who comes out ahead and who facing them headwinds in the market because of these safety questions. So let's get into the specifics. The trigger for this market reaction was that crash with the Xiaomi SU7 sedan in Chengdu.
Yeah, and while the investigation into the crash itself is ongoing, what really caught everyone's attention was what happened after the collision.
What was that?
Well, reports indicate that rescuers couldn't open the vehicle's doors. That immediately brings up questions about, all these electronic door handles and systems that are becoming so common.
Ah, okay. So if those electronic systems go down in a crash, maybe the power gets cut or there's damage, the old mechanical backup isn't there.
That's the worry. And think about how these things are usually wired. Most EVs have a low-voltage system, typically 12-volt, running things like door latches, even when the main high-voltage battery disconnects in a crash.
Right.
But a really severe impact could damage that 12-volt system too, or the wiring.
Meaning those fancy electronic buttons or handles become useless, and you could potentially be trapped inside without a simple mechanical lever.
Exactly. And this comes at a time when Chinese regulators were, frankly, already getting stricter. They were looking closely at assisted driving ADs and also at battery safety, especially fire risk.
So this incident just adds more pressure.
Absolutely. More pressure on everyone making EVs to really demonstrate that these vehicles are not just smart, but fundamentally safe with reliable backups.
Okay, so if the focus shifts, even temporarily, from, say, 0 to 60 times to whether the doors open after impact, where does the market look? Who benefits when safety and redundancy become top of mind?
Well, you tend to see a move towards established safety tech. There are a few categories that likely gain traction as automakers and regulators push for more robust, sometimes more mechanical safety features. The first one is pretty straightforward. The traditional automotive safety suppliers. This kind of incident makes manufacturers rethink, maybe pull back a bit from pure electronic systems. They might speed up adding mechanical backups, stronger latches, better fire suppression.
We're talking about the components that aren't flashy, but they absolutely have to work when needed, the fail-safes.
Precisely. So think about companies like ALV. They're big in airbags, restraint systems, the real core safety stuff.
Yeah.
And also MGA Magna International. They do a lot with latches and, importantly, mechatronic door systems. These physical parts are suddenly back in the spotlight.
Right, the market wants that mechanical certainty again. But, okay, if part of the problem involves electronic controls leading to a potential mechanical failure point, why would ADNS and vision stack providers be winners? Isn't that adding more electronics?
Yeah, that's a fair question. It seems a bit counterintuitive, but it reflects how regulators often react. Yes, they look at the mechanical failure point, the door latch in this case, but they also look at prevention. Incidents involving electronic controls or driver assistance often lead to calls for better electronic systems upstream specifically, better perception to avoid the crash in the first place. If the ADS can prevent the severe collision, maybe the 12-volt system doesn't get compromised.
Ah, I see. So it drives demand for more reliable cameras, LiDAR, better software that can see and react more effectively.
Exactly. Better situational awareness. So names that might benefit here include MBLY, Mobileye, known for its computer vision ADAS software. You have LAZR, Luminar, working on LiDAR hardware and software, and AMBA, Ambarella, which makes the specialized chips of vision silicon, needed to process all that sensor data quickly.
Okay, that makes sense. And the third category you mentioned earlier, thermal management and battery safety. How did the door issue connect there?
It's more about the regulatory environment. Any major EV safety headline, even if it's not directly battery-related like this one seems to be, tends to give regulators momentum to push forward on existing safety concerns. And battery fires, thermal runaways, those are always major concerns. China, in particular, has been pushing for very strict standards on preventing battery fires. Global automakers know that meeting Chinese standards often means you're prepared for future rules elsewhere.
So companies involved in keeping batteries safe get a boost from the overall focus on safety.
That's the idea. Companies like THRM, Gentherm, focusing on thermal management solutions, and ON Semiconductor, ticker AUN, which supplies power semis and sensors used in battery management and other safety-critical systems. They benefit from that overall push for tougher standards.
All right, let's switch gears then. What about the downside? Which parts of the market face challenges from this kind of news, this contagion, as you called it?
Well, the most immediate impact is often felt by the China EV ADRs. That's American Depository Receipts for Chinese companies traded in the U.S.
Makes sense.
Yeah, contagion from a safety issue back home, plus the expectation of tighter regulations there, it weighs on how investors view those names.
So we're talking about NIO, XPEV, that's XPeng, and LI, Li Auto.
Exactly. Those often see selling pressure as investors price in more risk coming out of their primary market. Then, moving beyond China ADRs, you have the high beta U.S. EV makers. These are companies whose stock prices tend to move more dramatically than the overall market.
And why are they particularly sensitive here? Is it just because any negative EV news hits them harder?
Pretty much. Their valuations are often built on very high expectations for future growth. A major safety incident makes investors nervous about, potential lawsuits, sure, but also maybe slower consumer adoption if people get worried. Plus, the cost of meeting potentially stricter regulations.
So their growth story gets questioned.
Right. That's why you might see stocks like TSLA, Rivian, and LCID, Lucid, pull back more sharply than, say, a traditional automaker in these situations.
Okay, and the last category you flagged as potentially facing headwinds was EV growth-levered software features. What does that mean exactly?
This gets to the heart of the future business model for many EV makers. They're counting on selling or having customers subscribe to software features after the initial vehicle purchase. Things like advanced driver assist packages, connectivity upgrades, that sort of thing.
The software-defined vehicle concept.
Precisely. Now, if regulators react to safety incidents by putting more scrutiny on Level 2 ADS systems, or maybe demanding more audits of electronic interfaces, it can slow down the rollout of these features. It adds cost, delays development, and ultimately it can squeeze the profit margins expected from that software revenue.
So companies banking heavily on selling those future software upgrades are vulnerable.
Yeah, especially if those upgrades are tied to the systems under scrutiny. You mentioned TSLA earlier. They have significant exposure to software take rates for features like Autopilot and FSD, and maybe LCID too, given the costs associated with developing their premium ADS technology. Any regulatory hurdles add financial pressure.
So looking at the very short term, when news like this breaks, what kind of trading patterns do you typically observe?
Well, you often see any quick knee-jerk bounces in those high-beta EV names tend to fade pretty fast. Traders watch for signs of real impact. For instance, if you start hearing chatter from regulators or automakers about design reviews, maybe explicitly mentioning adding back mechanical redundancies.
Like physical door handles.
For example, yeah. Then you might see relative strength, or at least less weakness, in names like ALV or MGA, as the market starts pricing in the possibility of new requirements or contracts for those traditional safety components.
And thinking a bit longer term, say the next few months, what should people be watching for?
The key things to watch are official actions. Will there be formal investigations stemming from this Xiaomi incident, any recalls announced? And crucially, will China introduce new, tougher safety standards? Because of China's scale in both manufacturing and EV adoption, any new mandatory standard they set, like, say, requiring a mechanical door release on all new EVs, often becomes a baseline that global manufacturers have to meet everywhere.
So a standard set in China could directly benefit U.S.-listed suppliers of those safety components down the line.
That's the potential dynamic, yes. It could create ongoing demand for those safety and maybe even the advanced ADS suppliers we talked about, as automakers globally adjust their designs.
It really highlights that tension, doesn't it, between the push for sleek, minimalist electronic design, which consumers often like and can save manufacturing costs, and the absolute need for simple, reliable, often mechanical safety systems when things go wrong.
It's a fundamental challenge for the industry, and how they navigate that, especially under regulatory pressure, is something for you, the listener, to really keep an eye on. Now, just before we wrap up, a quick reminder. This discussion is purely for informational purposes. It's not financial advice. Nothing we said should be taken as a recommendation to buy or sell any specific security, including ALV, MGA, MBLY, LAZR, MBA, THRM, ON-N, NIO, XPV, KEY SLA, REVN, or LCID. This is just our opinion based on the information available.